my name's James Nicholson and welcome to my YouTube channel. In this video, I want to talk about this week's mortgage rates. There's so much going on at the moment that can impact mortgage rates, and I think you're going to see some volatility over the next few weeks. You've got things like the Leasehold Reform Act that passed on Friday. I'm going to be doing a video on that tomorrow. In fact, the last 4 days, that's been the most common comment. What is going on with leasehold reform? Well, I'm digesting everything that's happened, making sure that I've got all the facts, because it's not the clearest on the government website, so I need to do my research. Tomorrow I'll be back with that. That's going to impact mortgage rates for sure. What you're also seeing is the general election. Rishi Sunak, out of nowhere, came forward with the general election. That was based off the fact that inflation data had dropped, and probably he's looking at this saying, you know what, this might be the best time because maybe inflation is going to start going up again. And so that was why they probably called the general election. And there's lots of other things going on in the property market as well that could impact house prices. You've got stamp duty potentially being cut. That was being talked about. Maybe Labour, if they get into power, look at doing something like that to revitalise the property market as well. So it's just a real unknown and uncertain time, and so videos like this where we talk about the rates will be hopefully more beneficial to you over the short term. Now, if you're new to the channel, our goal over the next few weeks is to get to 24,000 subscribers. Now, we're very close to that, so if you could do me a favour, smash subscribe down there and hit the bell notification so you get all the new content as and when it comes out. And while you're here, smash like, tickle like, do something to that like button. That really helps me with the YouTube algorithm. It gets more views on the channel, and you're just an all-round great person if you do it. So let's look at the rates, what's going on at the moment. So first off, we're going to look at HMO mortgages. And so HMOs, if you're new to this, is a house of multiple occupancy. It's where somebody rents a property like student accommodation on a room-by-room basis. These are a lot more popular, and they're good for high cash flow. So a lot of landlords are looking at this. And so there's two deals here that we want to look at here. We've got a 5-year deal with the Mortgage Works, 5.54%. That's increased a little bit. The fees on these are quite high, but it's 3% fees, and they'll lend you 75% of the value of the property. On a 2-year deal, it's slightly cheaper. The 2-year deal is 5.39%. The fees are 3% as well, and the loan to value is 75%. So that's Mortgage Works. They're a pretty good lender. So I have quite a few mortgages with them. I'd recommend you go and check them out. Now, limited companies is how I recommend that you buy property going forward. So if you're going to buy buy-to-lets, that sort of strategy, then you should buy them in a company. It's way more tax efficient, and it really does work very, very well. Mortgage Works, again, is the best lender for the 5-year and the 2-year deal. These are slightly different to what you just saw. 5.54 for the 5-year is the same, with a 3% deal, 75% loan to value. And the 2-year deal is 5.29 with a 3% fee as well. This is limited company mortgages. This is how you should be investing on new deals going forward. I highly recommend you look at that. Now, buy-to-let in a personal name. This is the bigger chunk of the market, because buy-to-lets have been popular for around 30 odd years now, and so most people bought them in their personal name. And so that is something to look at here. These are the buy-to-let rates that you can get at the moment. So on a 5-year deal, NatWest is the best for the 5-year and the 2-year deal. 5-year deal is 4.57%. It has gone up a smidge since last time. Not much. Fees are 9.95, which isn't bad. Loan to value is 75%. That's not a bad deal. Considering a year ago, these rates, if you were looking at these 1 year ago, would be 6.5%. So there's some big changes there. The 2-year deal is 4.97%. It's a bit more expensive with 999 fees, 75% loan to value. Now, in the comments, I've had this on previous videos with NatWest. NatWest don't always have this, so you can apply on their site. But you can get it through a broker. My broker can get me NatWest. Any broker that does the whole market should be able to get you a NatWest buy-to-let mortgage. I don't know why they don't have it always on their site. So if they don't have it on the site, do go for a broker. Now, residential mortgages, these have changed this week. So the 5-year deal, the best deal on the market is with Barclays. They've been cutting rates in the last week or so, even though inflation data wasn't as good as we were expecting. And the Bank of England cut is expected to move into August now. So Barclays, the 5-year deal is 4.44%. That has decreased this week, which is good. 899 in fees, which isn't bad either. 75% loan to value. So that's if you've got 25% equity or a 25% deposit. That's where you should be looking, Barclays, for a 5-year deal. On the 2-year deal, this is a new lender that's come in as being really competitive now. Leeds Building Society, they're a big lender, which is good. They've got the deal at 4.74%. They have taken the best spot, but it is more expensive than the deals that were around last week. So 4.74 has increased over last week's best, but it is the best deal for this week. 999 in fees, 75% loan to value. So that's someone that you should go and check out. Now, what if you've got a smaller deposit, like 10%? Then these are the lenders to look at, and there's some new deals here this week as well. And so First Direct, they have decreased the rates slightly, and they've decreased the fees, which is good, because if these banks start having a war over fees, some of them, as you saw at the beginning, the HMO one was 3% with the fees. So a 5-year deal with First Direct is 4.78%, which is better than last week. The fees have gone down by about 500 quid as well, 490, and they'll do that on a 90% loan to value, meaning you need 10% deposit, or if you're remortgaging, 10% equity, which I'd hope most people would have at the moment. The 2-year deal is cheaper with Virgin Money. Virgin have been in the news for dropping rates in the last few days as well. The 2-year deal is 5.19%, which is a decrease. Fees are 995. Loan to value is 90%. So that's the same here. So all round, it's not been as brutal a week as it could have been. Because what happened was the inflation data came out last week. It wasn't as good as expected. That meant the swap rates, the rates which the banks lend to you at, increased marginally. So that meant that we thought banks would increase the rates to us. But the market is a bit slower at the moment. So they've got less transactions happening. So they are starting to battle a little bit again, like they did in December and January, in order to get your business. And that's a good thing. That's what you want. Positive, like fights with those guys to get your business. So all in all, it wasn't a bad week. Some new lenders to go and check out. Do smash like on this video, guys. Every time you do that, that really helps with the channel. And I'm sure you probably know someone that's looking to mortgage at the moment, remortgage, buy or whatever. There's a share button below here. If you click on it, you could then share it on WhatsApp or Facebook Messenger or Instagram, any message or email, and share that with friends and family that you know are looking for a good rate at the moment. Hopefully this video will help them. I'd always recommend that you get a broker to get these deals over the line for you. I always find, for the sake of 500 quid, it really is helpful and worth it, especially when you might be doing a deal for hundreds of thousands of pounds. Anyway, that's it. Do comment below if you know any other lenders that we should be looking at as well. And do check out all the other content on my channel, including this video right here.